following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks. Well, the S&P 500 has gone below the low that it made earlier in the week, below that 2033 level. We hit 2032.5, I believe, last night when Japan and China was getting whacked with bad news. We've since bounced back from that level, but we're still quite a bit higher in the New York Stock Exchange Index from that March 11th low. But that's the one that I'm really following, is that one, because the New York Stock Exchange Index is still under the highs of July. I mean, this has not gone anywhere, whereas the S&P 500 and of course the Nasdaq and the IBB and stuff have made those things go a lot higher. That's only 531 stocks. The overall market is still far weaker. We have a situation where the Nasdaq, it did not make a lower low earlier this week. It came close, went down to the 786, and we did the same thing in the Dow Jones. But if we close below that 2030 level in the S&P, that's an extremely bearish sign for the market, in my opinion. Now, we've been coming down quite a bit now for the past several weeks, and so the market is in an oversold position. But when we break that, that's going to be the equivalent of what happened in 2007 when we broke that August 15th low. We broke that low. We rallied from August 15th into October 7th, very quietly making new highs. Then it rolled over, and once it broke that low from August 15th, that started the big down move. That goes back to some old cycle theory that James Hurst used to talk about, called high translation. In other words, if the market crests the cycle early, if it's a 40-day cycle and it crests on day 10 or 11, that's a very, very bearish sign. But if it crests on day 22 or 23, that's a bullish sign. So we have that possibility of this high translation effect if we break that low of March 11th, which is just a very, very key low in my opinion. All the factors are there for something really bad to happen, folks. I'm talking about a minimum of 20%, probably a lot more. You've got the margin debt as high as it's been. You've got, bullish consensus as high as it's been. You've got debt like it's never been before in the history of the world. So there's a lot of things that could make this thing go south in a bad way. I have an announcement to make. As you get older in life, folks, you always make yourself a bucket list, and one of the things that I've always wanted to do was to be in motion pictures. And fortunately, my good friend Steven Spielberg gave me a call yesterday, and Lee Majors is bringing back The Bionic Man. It's a geriatric version, and I'm co-starring with Lee Majors, my old friend. The problem is I've got to have some surgery, so I'll be gone until the 13th of April to get the surgery out of the way, to get me back to the way I was when I was 18. So anyway, if you believe that, I still have 2 shares of the Brooklyn Bridge available for sale. But I will be back on April the 13th following some just old man surgery stuff, so it won't be too bad. So we'll see what happens. Anyway, it'll be fun. Anyway, that's an April Fool's joke. I know Basil didn't get one today. Thought I'd always throw that out to him. So we'll see. Okay, I wanted to talk a little bit about the DAX, the Vix Index. It's really not showing very much. Here again, we have a situation where we have, virtually, no fear in the market at all, folks. I mean, it's just, the people are just absolutely not afraid of the market at all. There's just it's got all the characteristics are there for something really bad to happen, and it'll probably happen, in the middle of the night. What it usually does now with this overnight trading. We didn't have that back in 1987, but something bad is coming. I don't think there's I don't know how you can possibly say that it's not. If you look at some of these charts, they're starting to roll over badly, and it's getting a little scary. And remember, we have this big date coming out here towards the end of April, so maybe that could be a big low. We'll see if that's going to happen. We'll wait and see. But if you take a look at this Vix Index, you'll notice that we've actually gone nowhere over the past month, actually, almost last 3.5 weeks. And we need to get the Vix, somewhere above 18 to get some people, even interested in it to actually take a look at it from the bullish side of that Vix Index. So we want to watch that very, very closely. When Basil starts to warn you folks, pay real attention, because he has kept you folks on the right side of this market for one heck of a long time. And I believe that, when he starts warning, it comes time to make you think that maybe this is the time, to really take a look at it. So we'll watch that very closely. Now, we have one market that's operating really nicely this morning, one we've been talking about for quite some time. And that is the gold market. We had a very interesting pattern here this morning right before the report. We had a beautiful Gartly pattern forming down around the 1180 level. That was nothing more than a 382 retracement of that big move that we had all the way up to 1225, and now we've reached the 61% retracement all the way up to 1204 in a matter of just a few hours. And so with these wide bars and everything, this is going to be interesting what happens with the gold from this level, because we're at either a major resistance spot in the gold or we're getting ready to take off. Any close above 1225 in the gold, to me, is going to signal something really big is happening. The problem is in the silver market, because silver is lagging badly again. For a while, it was acting okay, but now it's not having that same effect like it had before. Silver's only up, 24 cents. And gold's up, $20. So, silver's up $1,200, gold's up $2,000. So there's a big difference in that. You'd like to see silver moving along step by step with gold, but that is not, in fact, what is happening. So we'll watch that gold market. Remember, if we get above that 1225 on a closing basis in gold, I really think that this thing is ready to go. And we have enough things in the market to make gold go a great deal higher. It's held some major support all along here these past few weeks, as we've been, pointing out, and it does have a chance, a slim chance, but it does have a chance to go. So we'll see. We'll see what's happening, with the gold here. If we get above that 1225 level, we need to get silver above 1740 per ounce in order to kick that thing out. I'm not going to be able to be on the show tomorrow because of prior commitments with my physician. And what I need to do is to go over something on the crop report that we had on Tuesday. It was a relatively bearish report for corn and beans and wheat, but the market has held up extremely well. And I wanted to specifically talk about corn, because it's held some pretty significant levels here, given to the fact that we've had a really, really bearish report, and we couldn't even take out last week's low with a bearish report. And so it's holding up, very, very nicely here. But we need to get corn up about 25 cents in order to change the trend from bearish to bullish. But with the crop report, now that just means they haven't even begun to plant the crops yet. That's just the preliminary report, and they'll be planting corn here in about a week or so. Probably some people are trying to plant it in Illinois and Indiana now, but some of that ground is still frozen. But that'll be the time when we'll be starting to look at that. So it's holding up, relatively well at that point. So we want to watch both wheat, corn, and beans. Wheat has been acting the best by far. Beans have been the worst. They're still under $10 a bushel. and but that's still down the road before. We're going to have at least one or two crop scares for this over the period of the growing season, but it'll be a little bit of time before we get into that. The next one that I wanted to cover, I wanted to do a few commodities here now because I'm not going to be here for the commodity show, and I wanted to talk just a little bit here about the crude oil, because crude oil came down nicely. Took about 2 weeks to get there, but we've made a 50% retracement in the crude oil, and it came in right around that 47. Now we had a really strong rally of $2.50 a barrel. So that tells us that we have some strong support down there at $47. If that holds, that's going to give us a price level of about $60 per barrel. Still quite a bit under the $115 barrel that we had as our high last year, but at least it would be the first big correction that we've had in this vicious bear market that has brought gasoline prices down to $2 a barrel and under in certain parts of the country. So those are the ones that I wanted. There was one other that I wanted to mention, and that is the live cattle market, because we were talking about that last week. We were looking at the June cattle contract, and we'll get that up for you, and you'll see that we did go right up to that perfect Gartly 61% retracement at 53 and change, and now the cattle have started to back off a little bit, and that's what you'd like to see, because now you're pretty much, if you did this, you'd be pretty much in a risk-free trade, because of the fact that it didn't go anywhere above 153.43. The high was 153.60. So I mean, it was spot on. And now we're trading lower. We need to get the market below 150, and then that would give us a price level of possibly down to that 145. But this is the first really bearish Gartly that we've had since November. So this should be an important one in the cattle market, where we would be coming down. Okay, the first question that we have from one of our dinners is the Apple. What is happening with Apple? All I know what's happening with Apple, folks, is the whole world is bullish that stock, and that's not a good thing, because when you got everybody on one side of the market, that usually turns out badly. But we'll take a look at the chart here, and you'll see we'll do the weekly, because that's the one that shows the big move, and where we've gone over the past several years. We've had a round robin from 700 down to 385, and then all the way back. But this is really setting up to be a potentially really bearish chart that we're looking at here in Apple. We've never taken that high out from the last from 5 weeks ago, when we made that 133 level. And we're still not too far away. We're only $10 away, trading at around 124 and 123.92 and change. So it's got this is just a very bearish ABCD pattern, which a price objective of a minimum of 110 in Apple. I know everyone's talking about all the products that they're going to come out with, and they do have a wonderful company, just like they did when they were $700 a share before they went to $385 a share. All I'm saying is the technical picture in Apple is just not as bullish as what everybody's telling you in the news. So we got the Dow down about 150, and we got gold up $20, and we'll take a break here. 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm back, and I've been asked to explain the relationship between silver and gold. So I've posted the chart for the silver into the Tiger TV, so you can take a look at it. We're trading in silver right now at about $16.90 an ounce. Our old high was $17.60 5 or 6 days ago. See, we're very, very close to breakout in the gold, but the silver is lagging badly. And you really need silver to tag along with gold, in my opinion, in order to get the market moving better. We've had no increase in open interest or any signs of any big volume or anything in gold and silver. It just sort of remains static with more of a dwindling effect than anything else, which is usually not too much. Excuse me, I posted the wrong chart first. I wanted to do Amazon first, but I posted silver secondly. So the silver chart's up now. That's what we're talking about. And then I'll move on to Amazon in just just a minute because that was our next question that came up. So silver still has a chance, but we really need it to get about $3,000 higher than where it is right now, and it doesn't know if it has that much of a chance to do it, because it's not even close to the 61% retracement of the low we made 6 days ago, whereas we're hovering right there at that right now on the gold. So that's the real key. The next chart that I posted came from question about the Amazon. I think Amazon is probably one of the best companies. I mean, I use them all the time. I mean, it totally amazes me that you go in there and you find what you want, you click on it, and 2 days later they deliver it. I mean, you can't go out and shop cheaper than that. I mean, it's really a fantastic company. I happen to know one of the big executives from Amazon that lives up in Washington, and he's a really nice fellow. He's a genius. He's actually a savant, and he's told me about some of the brilliant people there, including Jeff Bezos. But it's really an amazing company. But I am totally amazed that you can buy something in a matter of 2 days, have it delivered, directly to your house. So that's a really great company. There's a lot of great companies out there, just like Apple is. I don't know whether the price of the stock reflects everything, but you look at Amazon, and they certainly have controlled quite a bit of the market. But okay, the main thing about Amazon is when it made those 3 drives to a bottom down there, we had the triple bottom hovering right there. You can see it on the chart real easily. And then the market started to move up, and then an earnings report came out, and the market left that huge gap. It will fill that gap sometime, maybe not in my lifetime, but it will fill the gap. And but that's the gaps. Almost all gaps are filled, folks. There's just no other way to explain it. If you just go back and look at a chart, they'll be filled. There's one unfulfilled gap in the Dow Jones. That's right after the Desert Storm War. I believe the market was up 8% the next day following the war, and never looked back. That was the Dow at around 2,800, I believe. I don't remember these 2,800. It left that monster gap where every stock on the Dow Jones gapped up quite a bit, and that gap is still unfilled. It will be fulfilled in some time, but when, I'm not sure. So we've got gold moving now a couple of dollars above the 61% retracement, which tells us we're probably heading up to the 1210 level, which is the 786 level. And we just had a 61% pullback in the range of the day, early range of the day in the S&P, coming in at the 2045 level. By the way, I wanted to give a kudos to our good friend Mr. Z in the room for calling a trade out to us just on Monday, when he said he was selling the S&P at 2079 at the 61% retracement, and the market went about $3, 2082 and a quarter, and then dropped 50 points. So I don't know if he made the whole 50 points, but it was sure an alert. It was a potential really good short. I mean, when it held that level for so long, it was really good. So our hats off to Mr. Z in the room. So we'll be watching that, folks. I can't. Well, I've got a few minutes here, but we really have to watch this March 11th closing in stocks, because if we go below there, you want to protect yourself if you have, your 401ks and the other things that you have. Because this could really be nasty. It's all set up for it. It really is. And the Federal Reserve, they're not going to be much help this time, because the cannons on their ship have been put out for a long time, and they're almost out of cannonballs. So we've got to take a little break here. We've got the Dow under pressure, and we got gold rallying, making new highs on the day.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, I knew this was going to be a good day today because we have on the line, waiting to tell us about Priceline, is Priceline Charlie from La Paz, Mexico. Charlie, are you there?
Hi, Larry. I'm fine. I'm actually in Atlanta.
Oh, that's right. You're buying some equipment or looking at auctions, correct?
Yeah, I was looking at auctions. Let me tell you something. The prices were incredible. On a personal level, if you wanted to buy a 2007 Ford pickup truck, the price was $2,500.
Well, that's 10% of the value of the car when it was new, wasn't it?
Yep. On the other side, big earth movers, okay, big ones, $250,000 ones, were selling for $25,000.
Oh my gosh, how much is a rig like that cost when they make it?
It's $250.
Wow, so it's running. That's really something.
Now, I'll mention something. You know, the Fleet Penske is a big national firm.
Oh, sure.
They were selling 25 trucks in Arizona, and here they had 25 trucks. I mean, these are great trucks, about 100,000 miles, tires in great shape, engine is perfect. This is a well-maintained truck that shouldn't be sold. That's over $100,000. They were selling for $15,000 on the high side. The lowest one was $10,000.
Now, there's something's going on. They're clearing out stuff for construction, it seems like.
Transportation is in trouble. I'll give you an example. 3 days before, my client calls up and says, hey, I want you to look at a crane. I said, great. I call up, I check it on Orbitz, and I look up flight from La Paz to Mexico City to Atlanta. Normal price about $600 and change. Well, 3 days before, I figured it's going to cost $900. I go to Orbitz, the price was $345.
Wow.
On the way from Mexico City to Atlanta, 150 passenger plane, 737, 15 people.
Wow.
Something is wrong. I mean, Walmart was at the auction selling a lot of trucks. I mean, these were almost great-looking trucks. They were getting about $50,000 for a big rig, and it's like half the price. I mean, dump trucks, $4,500. There were some vehicles that were selling on the higher side, you know, but a majority were not in the right place. When I wired the funds, I called up the manager for Ritchie Brothers, where I went to the auction. I said, listen, how did the auction go? She says, this is one of the largest auctions we've ever had with fleet vehicles. I'm like, I noticed that. I bought myself just a pickup truck just to run around, diesel, good-sized engine, flatbed, because I need to pick things up to run them to places. $4,500.
Wow.
I know. Something is wrong.
Yeah, that's for sure.
You know, everybody's
Charlie, let's get the price line here. The folks are really interested about how you're doing in price line, and are we still looking for that $1,100 price level that we talked about a couple weeks ago?
Yeah, but that's on the way down. I figured to about 800. And
I think it could do that. Yes, when we get below 1,000, we could easily make 800 if it breaks, and if the market breaks really badly. This is a weaker than market stock, so we could certainly, go a lot lower.
You know, I consider myself an amateur when it comes to this. I hear some of the people talk about, and really that's where I use your help. I use the computer, but I still do my hand charts by hand so I can feel it better. But I noticed when I looked at Priceline, if you go back to March 2014, there was a peak. You look at August 14, was another peak. You look at just now, March 2nd, is the third peak, but look, when you draw a line across the upper trend line, it's pointed down. And Bud Rolfe used to say, I mean, that's one thing Tom has done. He assembled a great team of people to help people like myself really don't have
we miss Bud quite a bit, but he's having fun with those triplets, I'll bet.
I tell you something. The point is that Tom assembled a nice team of people that guide us. And I saw Tom. He started from the bottom. I mean, there wasn't anything there. And slowly he got the various people, and he's making progress. I'm waiting when he's going to go public. I would invest in TFNN.
I would buy stock in him, that's for sure.
Yeah, I'm expecting someday it's going to happen. I mean, there's no doubt in my mind. I see something start. It's like a shoot, and it goes and goes and goes. And then you assemble your management, you assemble your people. And, I mean, to me, this is very helpful. What you do is you help me a lot. So anyway, I looked at the bottoms. Look at the February 14, October 14, and I think it is May or just now March. Just now March. Yeah. February, I think it was. The bottom, you can clearly see the upper and lower trend line, and we're pointed down.
Yes, we certainly are. It doesn't look like it's not going to rally too much. I mean, it had a chance to rally with the rest of the market, but it could only rally for 4 days to get up to that 1200 level. And, now it looks like it's measuring down to at least 1,080 a share, which is, $60 from where we are now.
And, I looked at it, and I remember many years ago when I looked at some of the other companies, I says, boy, this chart looks like it's ready to go. And it's just like as fast as it went to 1,200, it'll break below 1,000. It'll be at 900 in a heartbeat.
Well, they can do it, that's for sure, because those big stocks can easily, give up a lot once they give up the ghost, that's for sure.
You talk about big stocks. I like to short the big ones. I added one more, Google. I mean, Google people say it's a great company. Driverless car? I don't see it yet.
It's going to be a while before they train us for that one. That'll be my grandson's car, probably.
I agree. But you know what? Google is only one. The company is not diversified. It's really a search engine. And the other search engine in competition is Bing, which is Microsoft. Eventually, things settle down, the revenues disappoint, and I don't see Google generating anything great. They got a new cheap notebook, but me on a cloud, never. I don't trust them. I prefer
I don't either. I don't trust social networking either. I think that's silly for people to do that, to let everybody know where they are, what they're doing, and pictures of everything. That doesn't make any sense to me at all. But, what do I know?
Before this, I was in the computer business, and I like my information on my own hard disk drive, and anytime it enters the internet, it travels from server to server to server, and that brings in opportunity for people to look at your information.
Well, look what happened to poor Hillary. They went in and hacked her, and all of a sudden, all of her emails disappeared. Isn't that amazing?
Isn't it amazing? I wonder if Bill knows how to use a computer.
Well, one of his cohorts probably does, for sure.
Yeah, we know the story there. But anyway, I was just wondering if, considering you're looking, and you mentioned you saw 1,080, but and you see it possibly going down lower.
Mm-hmm. Well, you got to get to 1,080 before it goes lower, so I want to see how it acts at 1,080. That'll tell me how much, if it's going to go lower. If it goes down there very, very quickly and very fast with a, big range day of like $60 or $70 in one day, that's tell us it's going to go a lot lower. But if it hits that level, I want to see where it bounces. Because that's a 61% retracement off the low we made in January. Then we had the rally, and then, the pullback. And so now what I'm looking for now is to see what happens at that level, at the $1,080 per share level in price line.
Mm-hmm. I tell you one thing. I sometimes get emotional, and that gets me in the way. That gets into trouble.
Welcome to the club, Charlie.
So, I tell you, you put the brakes on me in February. I was fully loaded on price, and he says, no, I think I wouldn't get in it before earnings. So the day before earnings, I dumped half my position.
I remember that. That's correct.
And I'm glad you cut me out of trouble, because now I'm emotional again. It's going to 800. But you're right. Let's get to 1,000 first.
You got it. Hey, listen, thank you for calling in, and we'll be watching it when it gets to 1,000, okay?
Okay, let's stay in touch. I appreciate your help.
Absolutely. We love having you on the show, Charlie. Thank you.
You're welcome. Bye.
Oh, you bet. That was Priceline Charlie from Atlanta, where he's buying equipment before he goes back to the paradise of La Paz, Mexico. We've got Lou from New Hampshire on the line. Lou, are you there?
Yes, how you doing?
I am good. You wanted to talk about gold.
Yes, I think I was getting some future calls.
Well, it would have been nice to buy them yesterday or earlier today, because we're up $25 an ounce right now.
Yeah.
But with this really strong bar that we're having here, this really looks good. I'm not very good with puts and calls, because that's a wasting asset, so I don't really like to recommend those unless they're dirt cheap. And with gold up $25, it's not going to be dirt cheap. But if you've got some money to buy some physical silver and gold, I really recommend that because I think it's got a chance to move out of here. That low we made back in November has held. We came down and made a higher low this time, and now with the gold acting really well today, it's really got a chance to get out of here. Long term, that chart in gold looks really, really bullish. I don't know what kind of call you're wanting to buy. If you want to buy something, like at 1350, that's probably not selling very much, or doesn't cost very much, but just be really careful because when you buy calls, they're wasting assets, and a lot of times the market will move in your favor and your call won't. So you got to be really careful with those.
Right. Yeah, I was thinking of 1,300 calls in July.
What price? Okay? July. What was the strike price you're looking at?
200.
200. You mean
No. It's at 1,300.
Okay. What are they asking for that call?
No, 1325. They're asking 200 for the call.
Oh, that's $200. That's not bad. No, that's not a bad thing. If we can get gold above 1250, I think because the ABCD on this move measures the 1375. So right. that would be a $200. I mean, you spend that with 4 people going out to dinner in Arizona and 1 person in New York. So that's not a big deal.
You said it, Larry. Thank you.
Yeah, don't buy more than 200 of them, okay? Thanks for calling in, Lou, and I hope you get to see summer this year if all the snow finally melts.
No kidding. We still have it here.
I know you do. It's unfortunate. We have a rough day in Arizona here today because we have it's going to be 90 degrees today, which is really nice. I wanted to talk here just a second about Alibaba. That's the Google of China, as you know. This basically, I wanted to show you when the IPO came out in September, it was really a crazy one. And the real buy came in when we had a 3 drive to a bottom pattern about a month later. And then the market took off and it had a 40% move. We went from 80 to 120. And at the high, T. Rowe Price came out and said they were loading up on Alibaba, another market principle of no skin in the game. And I'm sure they're still in this stock because it went from 120 down to 80 and it hasn't bounced much. I mean, this stock is just not acting well. It's acting far worse than the market. I'm sure it's a great stock because it's got to be, some of the aspects that Google has. Jack Ma, the CEO, is certainly a brilliant fellow, and I believe that he knows what he's doing. That's my assumption, of course, and we know how assumptions usually turn out. But this is a fact that the technical picture is what's really important. So on these IPOs, they really get hyped, and you got to be extremely careful. I know one of them is coming out today. I forget which one. Oh, GoDaddy is going to come out, which is a web search I don't know what they do exactly, but has something to do with the web. But the key here on the Alibaba is that does look like it wants to go lower. The reason why is we made a low back on March the 3rd, and we made new highs in the market after that. And, the stock couldn't even rally. It couldn't even make the rally that it did when it made the 382 retracement, a few months ago. So you want to be able to look at it. Yeah. GoDaddy is a website builder. They build websites and client spaces and stuff like that. So I don't know what it's supposed to be coming out at and how it's going to be viewed. It's pretty tough when you bring an IPO out when the market's down, 150 points in the Dow. So we'll see how it handles it when we look at it when it comes out here. Okay, one other question that someone had about the crop report. I'll mention again, I'm not going to be on tomorrow. So I'm sure they'll find someone to take care of the show. But the crop report for beans, wheat, and corn was a little negative, but the market has really not acted very badly against it. They just went right back into the trading range that it made just a few days ago. So that report is pretty much out of the way now. And so we'll just look at the regular technical picture and see what happened. The actual planting won't start until for corn is on mid-April. Okay, we got to take a little break here. We got gold making new highs on the day and the Dow down about 150.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've had a request to take a look at the Japanese yen versus the U.S. dollar. And as you know, that cross rate follows the Nikkei Dow just almost perfectly. It's about a 90% correlation. If we take a look at the daily chart here, you can see the ABCD patterns that have formed the double top that we hit a couple weeks ago. And that gives you an idea that there's very, very strong resistance at that point. We need to get above that level, which would be the 121.5 level. Then we'd have a chance to really, go much, much higher. If we take a look at this on the weekly chart, you'll see that going back over the last 12 years, The high that we made up around that 122 level was at the 786 and 618 from the high of 2003 and also the high from 1999. It hit it exactly to the 786 at 122.23. The high was 122.22 within 1 pip of the exact 786. That was 3 weeks ago, and we've been coming down quietly ever since. We're now trading 300 points under that at 119.50. This telling us that this is a very, very strong resistance. But folks, if we ever get above 123, this market could really go. And the reason for that is the old high in the yen, going back to 1989 when the Nikkei was trading near 40,000, was at 360. And we went all the way from 360 down to 75. And we've only rallied back to 119. That's not even a 382 retracement of that whole move. So if Japan has pulled all the stops out on this quantitative easing and they don't work, look out. There could be some really, really bad ramifications coming in the Japanese economy and also the currency cross rate if that, in fact, falls apart. I still can understand quantitative easing, why they do. I understand why they do it, but I don't understand why, because that's not, if you want to stimulate the economy, build bridges, build roads, put people to work, don't give money to big banks. Come on, folks, get real. This is what happened in the Depression. We had to have the WPA projects where they brought in people to build roads and bridges and stuff and put them to work. And for, really good schools, we need schools badly. We need good teachers, Got a lot of other problems beside giving the money to the bank. Okay, Larry, you can get off your soapbox now. Anyway, that's what we're looking at in the end. I wanted to show you one other chart that I believe is really important, and that's the Dow Jones Transportations, because, I still believe in the Dow theory that was promoted by Richard Russell, which he still does, and I wanted to show you that because it is not acting very well at all. We went down and matched the lows that we made on Monday. And we're still in a small uptrend, but this market doesn't take, we're already far below the March 13th low, which is one bad sign, but we really need to watch this because if it gets much weaker, it's telling us that we're going to be looking at some, really, really serious moves down in the market. That's what we're watching. Someone asked a question about, am I expecting the Federal Reserve to do something in June? I don't know when the Federal Reserve is going to do. I can promise you one thing, I will be the last person to know that. I've never gotten any inside information that worked. I've got inside information before, but none of it's ever worked. And I frankly, I have no idea what they're going to do in the market. How it's going to react, you don't really know. But, we've been in lower interest rates now for 33 years, folks. Bonds were trading at 13%. Back in 1982, and this is 1985. So for 33 years, we've had lower and lower interest rates. So that ain't going to happen forever, folks. Live every day in an attitude of gratitude, and I'll see you on April the 13th, God willing.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.